We have good progress against the war on tax cheats. U.S. courts are going after hedge funds for tax evasion. Technically tax evasion, it's complicated, but I'll try to do my best to summarize it. So a U.S. tax court ruling could require managers to pay self-employment taxes, which would increase their taxes by more than 3% on much of their income. 3% doesn't sound like a lot, but when you're making your money based off of investments, 3% is a shit ton of money. Mm-hmm. So this would the main phrase here that needs to be emphasized is pay self-employment taxes. So currently, hedge funds use this popular technique by identifying their employees as limited partners. So limited partners don't have to pay self-employment taxes as they are not technically active members of the business. Now, self-employment taxes operate as a part of the payroll taxes. You pay these all the time. When you pay your Social Security and Medicare taxes, you pay that normally, but when you're self-employed, you have to pay not only the business, your personal portion of the payroll taxes, you have to pay the business portion of the payroll taxes. So in this case, they're only paying, as a limited partner, they are only paying their personal side of the payroll tax. They're not paying the employment side of the personal tax that they should be paying as somebody who is technically self-employed.
I see.
But because they're classified as a limited partner, they don't have to do that. Okay. So limited partners do not pay self-employment tax on most payments as they are not active participants in the business. General partners usually have to pay self-employment taxes. What is a general partner? Well, every company needs at least one partner that is not limited. And this one general partner pays both sides of the self-employment tax. And then he dictates basically how all the other limited partners interact and how all of their relationships to the company operates. So, you can have one general partner and 20 limited partners, and they're all running this hedge fund, and only the one general partner is paying the self-employment taxes that really should be paid by each one of the limited partners too.
Okay.
So hedge fund managers use this classification and have been able to keep themselves from paying higher taxes. This ruling comes off the back of a New York-based hedge fund, Soroban Capital and Point72. These are two separate companies that are facing trouble with this ruling. And these are the Soroban Capital is a $20 billion hedge fund. Both of these partnered against New York to fight against it, the litigation, and they were on the losing side of the issue. So managers in this hedge fund, this is in Soroban Capital. So managers in this hedge fund were only paying taxes on $1 million worth of income. But they should have been paying taxes on closer to $70 million worth of income.
Wow.
That's how much money they're able to avoid paying their taxes on by having this limited partner loophole. Wow. If this ruling holds, the Point72 company will also see their reporting income have to go up exponentially. So in 2015, they reported $0 in taxes. They would have had to report $125 million under this new ruling. In 2016, it was $0 that they reported, but they would have had reported $219 million.
Wow.
This is a massive amount of money that is not being properly taxed, and people are just getting away with murder here.
Yeah.
I mean, these hedge funds are getting away with murder. Originally, the limited partner loophole was supposed to benefit Social Security and Medicaid and Medicare.
Really?
I think it was put into place in the 70s, and it was originally designed so that these people weren't putting an obscene amount of money into their payroll taxes and then get a lot of money out of Social Security later on. But then when they put in the Social Security cap, that no longer was the case, that they would be able to get so much money out of Social Security, and it became more beneficial for them. So it's very complicated.
So many loopholes, always loopholing.
I know, but the point is here, the court system is going after hedge funds. And, I don't know many times in my life where I'm sitting down reading the Wall Street Journal and read stories about courts taking on hedge funds.
No.
You know what I mean? I just feel like a tide is shifting. And every time I read one of these stories, I get more and more excited that there is more scrutiny being put on the controllers of capital. There is more ire towards them. hatred is a strong word, but there's a deeper distrust to the stock, manager than ever before.
Yeah.
And I think it's a good thing.
I do think it's a good thing. I think it's a result of the rise of populism right now, which we also talk about having horrible, frightening consequences. But one thing that populists on the right and left agree on and work together on in Congress often is taking down the big guy a peg. And I can't think of a better big guy to take down than hedge funds.
Yeah. Yeah. So that's really cool.